Alrighty, now to the economy, which is being helped by those low energy prices we just mentioned. But the year didn't start out that way. If anything, the brutal winter slammed the brakes on much of the country's economic activity. But then the growth engines were turned on. Steve Liesman reports.
5 long years after the end of the recession, a period marked by sluggish growth and stubbornly high unemployment, the U.S. economy may have turned a corner in 2014, beginning the year with a surprise decline in growth, attributed to weather but causing many to say, here we go again. The U.S. economy proceeded to rocket ahead, tallying its best 2 quarters of growth since 2003 and on track for its best year of job gain since 2000. Unlike previous post-crisis growth spurts, this time it didn't appear the gains would be given back.
It's pretty hard to find an economic measure where we're not significantly better off. I don't have to tell you about the stock market and where that's gone. Corporate profits, record highs, but also unemployment now lower than it was pre-Liesman. We've seen the housing market recover, although not as fast as we'd like. The auto industry recovering. We remain the most dynamic, innovative economy in the world.
Indeed, the U.S. looked like the shining city on the hill compared to other places around the world like Europe, which teetered on the verge of recession, and China, where the growth outlook was reduced. The differences were apparent in monetary policy, where the Federal Reserve took the momentous step this year of ending its open-ended quantitative easing or bond buying program launched in September 2012.
Looking at unfolding economic developments, and as the economy strengthens and we come closer to achieving our objectives, I think it's very likely that we will, progress on the path of normalizing policy.
At the same time, the European Central Bank looks set to take its first step into a U.S.-style QE program to kickstart its economy.
A QE program, which could include sovereign bonds, falls within our mandate, or better, is an eligible instrument that we could use in the pursuit of our mandate. Not to pursue our mandate would be illegal.
Next year looks to be one where the Fed takes another step towards normalcy, possibly raising interest rates for the first time in 8 years. But it's not without risk. If 2014 turns out to be another false start, the Fed could be moving too early. But if growth continues to be strong, the Fed could find itself behind the curve. For Nightly Business Report, I'm Steve Liesman in Washington.